Hello everyone. Welcome back to Accountants Minds. In our previous lessons, we learned about the double entry system, the accounting equation, and the types of accounts. Today, we'll learn one of the most important topics in accounting, rules of debit and credit. Many beginners think debit means money coming in and credit means money going out. But that's not true. By the end of this lesson, you'll understand when to use debit and when to use credit with simple examples. So, let's get started. Before we learn the rules, let's first understand what debit and credit actually mean. Debit and credit are the two sides of every accounting transaction. Debit, written as DR, is recorded on the left side of an account. Credit, written as CR, is recorded on the right side of an account. Every business transaction affects at least two accounts. One account is debited, and another account is credited. One important rule you should always remember is that the total debit amount must always equal the total credit amount. Another common misunderstanding is that debit always means an increase and credit always means a decrease. That is incorrect. Whether an account increases or decreases depends on the type of account. That's what we'll learn next. Here are the 5 main types of accounts and their debit and credit rules. Assets increase with a debit and decrease with a credit. For example, when a business receives cash or buys furniture, its assets increase. Therefore, we record a debit. Liabilities increase with a credit and decrease with a debit. For example, if a business takes a bank loan, its liability increases, so we record a credit. Owner's equity also increases with a credit. When the owner invests money into the business, capital increases, so we credit the capital account. Revenue increases with a credit because earning income increases the owner's equity. Expenses increase with a debit because expenses reduce the owner's equity. An easy way to remember this is, assets and expenses increase with debit. Liabilities, owner's equity, and revenue increase with credit. If you remember this simple rule, deciding debit and credit becomes much easier. Now that we know the rules, let's learn the steps to decide whether an account should be debited or credited. Whenever you see a business transaction, don't rush to decide debit or credit. Instead, follow these simple steps. First, read the transaction carefully. Second, identify all the accounts affected. Third, determine the type of each account, such as asset, liability, expense, revenue, or owner's equity. Fourth, check whether each account is increasing or decreasing. Finally, apply the debit and credit rules. If you follow these steps every time, you will make fewer mistakes. Let's apply these steps using some practical examples. Let's start with the first example. The owner starts the business with 100,000 rupees in cash. Here, cash is an asset, and it is increasing, so we debit cash. Capital is owner's equity, and it is increasing, so we credit capital. Now let's look at the second example. The business pays electricity expense of 5,000 rupees. Electricity expense is an expense, and it is increasing, so we debit electricity expense. Cash is an asset, but it is decreasing because we paid cash. Therefore, we credit cash. Finally, the business borrows 50,000 rupees from the bank. Cash increases, so we debit cash. Bank loan is a liability, and it increases, so we credit bank loan. Notice that in every example, the total debit amount equals the total credit amount. Now let's look at some common mistakes that beginners make. Many students confuse debit and credit. Some think debit means income. That is not true. Others think credit means expense. That is also incorrect. Another mistake is believing that debit always means increase and credit always means decrease. Remember, it depends on the type of account. The best way to avoid mistakes is to first identify the account type, then decide whether it increases or decreases, and finally apply the correct rule. Let's quickly summarize everything we learned today. Today, we learned the meaning of debit and credit and understood that every transaction has at least one debit and one credit. We learned the debit and credit rules for the 5 main account types and practiced applying those rules using real examples. We also discussed common mistakes and how to avoid them. I hope this lesson helped you understand the basics of debit and credit. If you enjoyed this video, please like, share, and subscribe to Accountants Minds. In our next lesson, we'll learn journal entries and see how these debit and credit rules are applied to record business transactions. Thank you for watching, and I'll see you in the next lesson.